And I could imagine, just from how much I've seen your name everywhere and how much I've seen you pop up, LaTrobe would have been growing a lot over the last few years, probably getting to be one of the largest non-banks in Australia, if not the largest non-bank in Australia. What are some of the main
Yes.
investments that you manage over at LaTrobe?
Yeah, so the first point I'd make, and I just want to go back to some observations you were making earlier, Stefan, about the difference between LaTrobe Financial and the bank. So firstly, we're not a bank.
Yes.
We're regulated by ASIC, not by APRA.
Yep.
So our investments are not subject to the federal government's bank deposit guarantee. I've got to say, we've got no ambitions to become a bank either. So to be really clear about that. So, so that being said, we all know that bank deposit rates have been very low for years, well below inflation. And we don't, and I think most commentators don't see that changing anytime soon. So that means as an investor, if you've got money in the bank, you're actually losing ground inexorably month after month, year after year. And in our view, that's unsustainable. Mm-hmm. What we do is build diverse portfolios, high quality assets. As I said, they're loans. It's really simple in many ways. They're loans to borrowers secured by a registered first ranking mortgage. And through these assets, we aim to preserve capital and generate reasonable returns month after month. So we've got a variety of investment offerings that let investors choose the duration, if you like, that suits them. So I mentioned before, 48-hour account, the 90-day notice account, a 1-year account, and a 4-year account. None of those have ever lost a cent of capital, as I said before. So we're focused on consistency. That's been our hallmark, and we're absolutely focused on that for investors. We also have, for more active investors, we have Australia's largest and most robust peer-to-peer offering. So that's an offering that lets investors select individual loans. So, they could potentially invest, Stefan, in one of your developments if they decided that suited their own needs and objectives, and they could build their own portfolios of mortgage-secured assets. If we were to think about the current returns on offer, just as to give an indication of where we play, so the 1-year account or 12-month term account, as it's sometimes called, that's currently paying a headline rate of 4.7% per annum. It's a variable rate of return, but it is one that we manage over time to be pretty stable. So, I guess all this boils down to, Stefan, what we're trying to do through this type of offering is give investors a genuine alternative source of income.